first chapter is market structure. The market has three types of movements. The uptrend. The uptrend is the price structure that repeatedly breaks highs and maintains the price above the last lows. The uptrend is confirmed once price first goes up, then retraces back, breaks the previous high while not breaking the previous low, and this process usually repeats until a reversal pattern that we're going to talk about soon. So the price again retraces, doesn't break the last low, so the pullback ends above the last low, then price breaks the past high, and so on. This was a representation on how high time frame price action looks like on an uptrend, but usually the market structure is not that easy. You will more often see price look somewhat like this. So the uptrend starts by a price movement to the upside, then a pullback. Notice how the price structure looks different than the structure from the last representation. But the direction is the same. The reason is that the pullback from the uptrend is actually a low time frame downtrend that turns into a reversal into an uptrend. Basically, the end of the pullback is where both time frames. So the high time frame and low time frame align and move in the same direction. Then the uptrend confirms after the time frames align and price breaks the last high. And essentially the same type of high time frame price action repeats until a reversal. The low time frame downtrend and the high time frame uptrend. So we are talking about the pullback. It will likely look different since obviously price reflects the buy and sell orders that are executed so fast, especially on liquid markets like Forex and the stock market. But the direction is the same. We will shortly cover why price action differs but has the same direction, and it's all related to liquidity. The second type of market movement is the downtrend, oppositely to the uptrend. The downtrend is a market structure movement that repeatedly breaks the past lows while holding the price below the last high. This movement is often characterized by a lower low and lower high. So the high time frame trend is a downtrend. Then the pullback on a downtrend is to the upside, meaning that this pullback is a low time frame uptrend that reverse and align with the high time frame trend once the pullback ends and practically after it dumps down and breaks the past lows. This is the simplest explanation and representation of the downtrend. Now let's learn how price action actually looks like on a more complex example. So in a downtrend, the price action starts by a downside movement, then a low time frame uptrend on the pullback, and then a break of the lows. This structure repeats. Pullback to the upside, but the upside movement is unable to break highs, then downside movement and break of the lows. The downtrend is a market that favors short sellers over buyers. The third type of market movement is the sideways market. The sideways market is represented by price action that is not trending and is moving towards the same levels. This type of market is often seen right before a trend reversal. For example, you will often see from an uptrend price stops the uptrend characteristics of breaking highs, but it also doesn't break the lows. This price action shows a psychology change in traders. Why does this move happen? For many reasons like buyers closing their positions, buyers not opening more buying positions, but also short sellers aren't that active, so it leaves price moving towards the same highs and lows for a short time period. These sideways market structures usually indicate a reversal. So coming from an uptrend into a sideways market, the price breaks the lows of the sideways market and turn into a downtrend. The sideways market is very hard to properly trade because the movement and order flow is so unclear. There is a good chance you might get trapped in the wrong direction and obviously unwanted large losses in our trading account. So the key word, the secret of this sideways market is to wait for this boring structure to break either side and look for trading opportunities after. Strong and weak levels. A strong level is a price level that price action has shown that it is very hard to break. And a weak level is a price level that price action has shown that it is easy to break. So let's look at the simple uptrend. This is the low of the first movement. On uptrends, we know that lows are not broken. So this is the first strong level. Then price going up, pulling back and breaking the high. So by confirmation of the uptrend, the lowest point of the pullback is the next strong low, and the high that broke is the weak high. And this markup repeats. In the more complex example, it is slightly harder. Upside movement, pullback, and break of the high. Here it is important to know that these are the strong lows, and these are the weak highs. Now in the downtrend, knowing that a downtrend has lows that break and highs that maintain, starting from the simple price action, price going down, pull back up, then breaking the lows. So the strong levels are the levels that don't break, and they are these levels, they are strong highs. And the weak levels are the price levels that do break, and they are these, so they are the weak lows. On a more complex price action, the direction is the same. Downside movement, pull back to the upside, break of the lows. The strong highs are the same, and these are the weak lows. We will get into right now to explain in it more detail. Internal and external levels. The external levels are structural price levels in the high time frame. The internal levels are structural price levels on the lower time frame. Let's take the uptrend scenario first. On the simple structure, it's easy. The external levels are the major highs and lows. There is no internal structure in this example. Same goes for the simple downtrend. The only levels are the external levels, and they are each major high and low. Now let's look into the more complex price action. Upside, pull back and break to the upside. First, let's identify the external levels. They are same as previous ones, meaning each major high and low. Now into the internal levels. The internal levels are, as we have said, the low time frame structure inside the high time frame. So the internal structure is the price action of the pullback. On the complex downtrend now, the downtrend is identified by an impulsive downside movement, a pullback to the upside, and a break of the lows. The external levels are the major highs and lows. The internal structure is the price action inside the pullback. And in a high time frame downtrend, the pullback is a low time frame uptrend. And these are the internal structures. These internal structures are very important to identify trading opportunities. We will learn all important concepts and put them all together to analyze a chart of fine trading setups. The breakout structure. The breakout structure is a trading concept used by smart money, used to indicate a continuation of the main trend and a liquidation of the orders that are against the trend, starting from a simple uptrend, price going up, pull back, and then breaks the high. The level that breaks the high is called a breakout structure, and essentially it does the same for the upcoming price action as long as the market structure is still bullish, so basically as long as the market is in an uptrend. For simplicity reasons, we can call them bullish breaks of structure when price is in an uptrend. And on a simple downtrend, price goes down, pullbacks to the upside, and breaks the lows. The level that broke the lows is the bearish break of structure. And the concept apply itself for the future price action too, as long as the market structure follows the continuation of the downtrend. We will go into more details on the complex price action after we learn the next concept, because these two work together. Change of character. The change of character, also named as market structure shift, is another concept used by smart money that indicates the first signal of a trend reversal. Let's go straight into the examples starting from a simple uptrend price action. Price going up, pull back, and breaks the high. Pull back, breaks the high, pull back, breaks the high. Knowing that the uptrend is characterized by higher highs and higher lows, the change of character begins once the next low breaks the last low. So essentially, the change of character signals a deviation from the initial trend. This is where its name comes from, by price changing how it looks, changing the order flow. We can also name the change of character as a market structure shift. They are essentially the same concept. But it is important to know that the change of character is only the first signal of a reversal. It is not a confirmation, because what it can happen is price just breaking the low and then going straight to the upside, essentially continuing the uptrend. This move is called a liquidity sweep, and we are going to talk about it a bit later. But now, let's focus on the actual valid change of character. The confirmation of a trend reversal comes only when price goes up, but is unable to break the past high, and then it goes down by breaking lows. So the price action has printed on the chart the market structure of a downtrend, and more often than not, this validates a reversal from an uptrend into a downtrend. Now for the simple bearish price action, we know that the downtrend structure prints the price going down, then pull back to the upside, and break of the lows, pull back to the upside, break of the lows, and it keeps going. The change of character in the downtrend happens when the price doesn't manage to break the last lows, and it breaks the last high, indicating the first signal that the market could reverse from a downtrend into an uptrend. But be careful, as the change of character is not a confirmation. The confirmation of the trend reversal happens when the price pulls back to the downside. doesn't manage to break the last lows, and it goes up breaking the last high. So essentially, it invalidated the downtrend fundamentals of lower lows and lower highs and validated a market structure shift to an uptrend by creating higher lows and higher highs. Now we will apply both the break of structure and the change of character on the same price action. We will start from the simple structure to the more complex one, which is closer to the action price action, and finally applying all the knowledge to analyze on the charts. So starting from the simplest form of price action. On an uptrend, price going up. Pull back to the downside, which is the higher low, break of the high that marks the higher high, and we apply the bullish break of structure, pull back to the downside, which is a higher low, break of the high being a higher high, and keeps going until the price breaks the past low. It breaks the higher low, which creates a lower high. And this level is the change of character or the market structure shift. Then price goes up, but is unable to break the previous higher high, and it creates a lower high. Then it breaks the previous lows, which are the lower lows, and this level becomes the bearish break of structure. So this is an important confirmation that the market has shifted from an uptrend into a downtrend. So the most likely scenario is that the market will continue the recently created downtrend by price pulling back to the upside, not managing to break the last highs, and it becomes a lower high, and soon after break of the lows. So another bearish break of structure. And price action constantly repeats until the market shows an intention to reverse into an uptrend. And that indication of a shift again into an uptrend is a change of character that breaks the lower high. So it creates a higher high. Then a pullback to the downside that stays above the previous lows. So it created a higher low. So essentially, it printed a market structure of an uptrend. And then the price action should be printing bullish breaks of structure. Now from the downtrend, price going down, pull back to the upside, breaks the lows and prints a bearish break of structure. Pull back to the upside, break of the lows, bearish break of structure, and it keeps going until it breaks the lower high, which creates a higher high, and it maintains above the lower low by creating a higher low. This is change of character, and if price breaks the higher high and still maintains above the last low, it basically confirms the bullish break of structure that has shifted the market trend from a downtrend into an uptrend. And the bullish breaks of structure keep printing until the price breaks the lows, while not being able to break the highs. So it essentially printed a change of character. And the confirmation of the reversal happens when the price pulls back again to the upside, doesn't manage to break the highs, and instead it breaks the lows. So this creates a bearish break of structure, and the market has essentially reversed again. So this is a presentation how a market can shift from a downtrend into an uptrend, and into downtrend again. Now into the more complex price action, in which after we will analyze on a candlestick chart. Upside pullback, break of the high that marks the following bullish break of structure. Now we enter into the more complex price action. The price pulls back. So remember that the pullback on an uptrend is a downtrend on the lower time frames. So knowing that we can also apply the breaks and shift concept on this price action. For example, here we have a bearish break of structure caused by the low time frame price breaking down the last lows, essentially creating lower lows. Then price pulls back to the upside and stays below the last high, meaning that it created another lower high. Then break of the last lows by creating another lower lows, so another bearish break of structure. So what often happens is when price respects the high time frame trend, in this case, an uptrend, the low time frame trend aligns with the high time frame trend and moves into the same direction, which in this case, it's to the upside. This break to the upside is met by a change of character inside the pullback. This type of change of character is named an internal change of character, or an internal market structure shift. So this indicates that the low time frame trend could soon reverse to follow the high time frame trend. The confirmation of the reversal is done by price not being able to break the past low. So by creating a higher low and breaking the past high, by creating a higher high. And this confirms an internal bullish break of structure, in which price follows through the high time frame and continues the macro trend. And from the complex downtrend price action, here we will also apply complex reversals. Price going down and pulls back to the upside. The pullback is a low time frame uptrend with the opposite market structure from the higher time frame price action. So the price forms higher highs and higher lows inside the lower time frame. With internal bullish breaks of structure, This pattern repeats until the price is unable to break the last higher high inside the low time frame, and it goes down breaking the last higher low, which price forms a lower high and lower low. So it forms the fundamental price movement of a downtrend. This changes the character by shifting the internal market trend, and essentially the internal price aligns with the high time frame moving into the direction of the main trend, which is a downtrend, and it breaks the high time frame low. So it created a bearish break of structure on the high time frame, and this price action typically repeats internally. So again, pull back to the upside. Internal higher highs and internal higher lows that forms the internal bullish breaks of structure up until the price can't break the last higher high. And it goes break the last higher low, which creates a lower high and a lower low. This has formed an internal bearish change of character that aligned the low time frame trend with the high time frame trend, essentially moving the same way, which is to the downside. So basically, the price action of the first part of the structure repeats itself. That is because the price has yet again changed character into a bearish standpoint. So that means that we have a pullback to the upside, a high that is not able to break the last high, meaning it has set a new lower high, and it breaks the last lower low, setting a new lower low with its own bearish break of structure to the downside. And once again, pull back to the upside, can't break the last high, which sets the price as a new lower high, then breaks the last lower low, and sets a new lower low by breaking down, and leaving another bearish break of structure. And the same process happens on the next one. We can see here that price breaks the last major or external low, which creates a new external bearish break of structure. So it confirms the breakdown of the last external lower low, and it is looking to create a new lower low in the high time frame. So basically the high time frame and low time frame were aligned up until this point, where the market was unable to break the last external low, and enters into a low time frame uptrend by breaking the previous internal lower low, which marks a new internal higher low. And that validates the new internal bullish change of character, from which price action confirms the uptrend by continuing the uptrend price structure. So by creating internal higher highs and internal higher lows with their own internal bullish breaks of structure, and the price goes up to break the last external lower high. And by breaking it, sets a new external higher high with its own external bullish change of character. We have marked with the purple dots every external level, with the blue dots every internal level. The price action from above, so the black lines, is the low time frame price action, and the one below with the orange lines is the high time frame price action. The direction and price is the same in both time frames, only the action and structure we see is different, and the structure is very important for traders to analyze setups. And finally, let's jump into the chart and apply what we have learned. This is the euro-dollar on the daily time frame. The market initially started from an uptrend. If we simplify the price action, this is the upside movement marking a higher high. Then the price pulls back. As we have mentioned before, the pullback is a low time frame downtrend, with its own internal bearish breaks of structure. We can't see them the best here, because for that we need to move into a lower time frame to observe the low time frame price action on the pullback. For example, switching from the daily chart into the 4-hour chart. But we have the most important part, which is the internal change of character. This structure marks the end of the pullback and validates the formation of the high time frame higher low. This shifts the low time frame structure and aligns the price with the high time frame by going up, breaking the last high time frame higher high, and creating another high time frame higher high. Then we have another pullback, but it breaks the last higher low, which marks a new high time frame lower low, and this is a high time frame change of character. Pay attention and see how price action behaves similarly, like we have explained on the line presentations. So we got the first indication of a market reversal by the uptrend breaking the last low. Remember what we have mentioned before, that the reversal confirmation happens only once the price pulls back to the upside, is unable to break the last highs, and instead it breaks the previous lows, essentially creating the downtrend fundamentals, and those are lower highs and lower lows. It is only now that the downtrend has been validated, and see how price pulls back to the upside again. But the maximum highs are lower than the last maximum highs, and since this market has entered a downtrend, the market could run to break the lows again up until it shows a reversal sign, and the reversal sign that we use is a change of character to the upside.